For California, the coming year means a new governor, but the same old debt. To take a look at the finances of the state, we're joined now by Josh Gonze in Santa Fe. He is co-portfolio manager of the Thornburg California Limited Municipal Fund, and it has outperformed 99% of its peers in the last 5 years. Josh, welcome to the program. Looking through your notes, I see you saying that things are not as bad in California as the headlines make them seem. So does Arnold Schwarzenegger leave California in better or worse shape than when he came in?
Well, first, good morning, and thanks for having me. Yes, I think that the way we approach investing in California, we want to have a balanced view of what's going well in the state and what's not going so well. And we've seen a tremendous amount of negative news in the press that has created something of an opportunity for bond investors. Some of the things that I think are going well, I think that's what you were getting at, as the new governor comes into office. And he is facing a tremendous budget deficit that's going to have to be addressed. He's going to have a great deal of work to do. But he's fortunate in that state revenues in the third quarter of 2010 were actually higher than a year ago, the third quarter of 2009, which is in keeping with the national trend where state revenues across the country were about 5.5% higher in the third quarter of 2010 compared with third quarter of 2009.
Hey, Josh, it's Dominic here. One of the things that you do as a bond fund manager for a state kind of municipal bond fund structure here is to try to find value within the kind of California bonds or obligations that are out there. So where are you seeing the value? Why are you outperforming where other California bond managers may not be performing as well as you are?
Yeah, that's a good question. That's our whole job. That's our whole purpose of what we do when we come to work in the morning, is to seek out the best values that we can find in a particular state, for example, for the Thornburg California Fund, and to leave out the bonds that are the weaker ones. So I think what we do well is we are good at buying good bonds at low prices and putting them into the portfolio for our investors. So typically what we'll do is we'll look for, number one, we want to identify the weak credits and discard them. We simply don't want them in our portfolio, and I think we've done a good job with that.
Josh,
and the second thing we do is...
I'm sorry to interrupt. How do you define a good bond, a good quality bond?
Well, by good quality, I mean I'm referring to good credit quality. We want bonds that have a low risk of default. We want bonds where, for example, the debt service coverage number is satisfactory or even very strong. We want bonds where the tax base is solid or the revenue base. We want the source of repayment on the bond to be very strong. And in fact, we prefer if there are two sources of repayment. We'd like a double-barreled bond so that if something goes wrong with payment source number one, we can look forward to a backup source. And often we can find bonds with those characteristics. California, there are thousands of different municipal bonds within the state of California. Every city, town, county, school district, and special authority issues bonds. Our job is to identify the good ones, like I just described, and to reject the ones that we think are troubled. And I think you're right, Dominic. We've done a good job. We're distinguished. We generated in 2010, which was a tough year for bonds. We managed to generate about a 3.6% return in our limited term Cal fund.
Hey, Josh,
so we have had a good year.
Josh, where are those good bonds? Are there certain municipalities that you're going to or staying away from? Are you going towards revenues, general obligation bonds? What kind of things are you finding value in right now?
Right. Well, without giving too many of the king's secrets, we are looking favoring revenue bonds over GOs. We've done very well with that. We find while there's an old-fashioned rule of thumb that GOs are safer than revenue bonds, we find that's often not the case, and that some GO bonds are actually weaker. And there are many very strong revenue bonds. For example, LADWAP, Los Angeles Department of Water and Power, is a very solid revenue bond that we are keen on and have a large position in.
Josh?
We are big. Go ahead.
No, going forward, I wanted to, before we say goodbye, I just wanted to get this last question in. How does Jerry Brown change the investing landscape for California?
I'm sorry, repeat the question?
How does Jerry Brown coming in as governor change the investing landscape here?
Okay, Jerry Brown is going to have to both raise revenues and cut spending, and we think that he's going to be, it could get tougher on school districts. There are thousands of school districts in California, and we're going to be very careful about how we pick our way through the school district field.
All right. We thank you for your time and appreciate your thoughts on investing in California's muni bond market. We've been speaking with Josh Gonze of Thornburg California Limited Municipal Fund. Thank you so much.